on why the market is moving and where it might move through the week?
Yeah, so again, like I was saying last week, forget about the OPEC thing because they did exactly what the market expected them to do. So that the news is not a fresh input, so to speak. So that was already in the price. The question is, what does the oil price do from here? Is the top in, or basically do we have one more push to the upside to go? And it's a very difficult call. But I think on the balance of probability, I think basically that the top is in. I like the fact that we had like an upside down V, a severe sell-off for whatever reason, and now we're basically bouncing again to the upside. So I think the odds are shifting. I would start, maybe not this week or maybe not this side of the new year, but I would start to bet that we're going to start falling on energy, on oil, maybe even on gas prices as well. So I'm no longer kind of bullish. I think the odds have shifted. So downside, I think this is a bounce. We came off $10, so moving up is no surprise. But I think it's something to be sold rather than to be bought. There is a possibility, there is a probability that new highs are ahead of us, all that kind of stuff. But right now, I think the odds are lower and not higher. That's my view.
Let's welcome Kate Durian, sitting in London, Mees contributing editor, non-resident fellow at the Arab Gulf States Institute in Washington. Kate, I'm not sure I would concur with Omar's view that OPEC did what the market was expecting, but it certainly seems like the market didn't care about the outcome because the increase of supply resulted in higher price. Your thoughts on the decision and the reaction?
Yeah, thanks, Sean. I don't think the reaction was that much initially, just after the meeting ended. I think it went up just very, very slightly. So I don't think it's a very huge move. I mean, it was just below 70. It's now at 71 something. But I think they were in a bind. I mean, they are expecting a surplus to emerge in the first in early 2022, if not before then. And if you look at it, the nominations for January would have been locked in anyway at that time. So they're keeping the meeting it's an open-ended meeting. So if they need to tweak again, they will. But, there are a lot of factors. I agree that it's probably now more of a bear market. No, let's not forget we're heading into the end of the year where people are sort of squaring their books. You've got stocks that are actually quite low still compared to pre-COVID. So I think that's, you're going to need to build stocks. You have some members who aren't able to meet their obligations. You have in one of your digest today, Libya NOC declaring that 4 ports are closed because of bad weather. This is a time when we start to see a bit of disruption to loading. So I think, probably steady as it goes. And we'll see how, but the SPR, despite the SPR release, you're still going to, with the SPR release, you're going to have a slightly higher stock build, but it's not going to be immediate because it's over a few months. And also with, Biden coordinating this SPR release with China and Japan and Korea and the UK, put them in a position where they couldn't be seen buckling to US pressure. So I think they just said, okay, we'll keep going as we plan and then keep it open-ended in case we need to have an emergency meeting and if the market turns.
Let's welcome a new commentator to the table, Clyde Russell, Asia Commodities and Energy columnist at Thomson Reuters. I very much enjoy reading Clyde's columns every week. Always find them quite precise and perceptive. And today we have one of them on the digest, which is his most recent one. What OPEC does with output matters more than what it says. Clyde, your thoughts on your headline and ultimately the thesis of your column and the decision OPEC made last week?
Well, I was expecting them to sit on their hands. I think there were just too many uncertainties for them to take a view one way or the other. And I think that, the market is still in that sort of place where there are uncertainties. Initial indications are this new coronavirus variant is not a serious thing. But there are others. It could, there are still governments taking action to cut down on travel and things like that. So we're not exactly certain how this is all going to play out. You then have the uncertainty of the SPR release. What does that actually mean? And so there's a number of things that are still sort of up in the air. So OPEC probably did the right thing in just a steady as she goes kind of outcome. But for me, what is important is, the market focuses a hell of a lot on what people say and not so much on what they actually do. So OPEC was supposed to raise output by 400,000 barrels a day every month from August to December, putting 2 million barrels a day back into the market. So far, they've put 1 million barrels back in. Okay, we've still got December to go. That's an August to November figure. So at the moment, we're short 600,000 barrels of what they said they were going to do. Now, I would ask, does anybody really believe that they're going to put in 400,000 more in December and 400,000 more on top of that in January? And then they'd still be 600,000 short. They'd have
I
to.
suppose there's a will and there's a can. The will they or can they? Where do you sit between those two?
I think if the structure of this agreement is actually quite unusual, in that the individual members of OPEC Plus are not allowed to eat each other's lunch. So the ones that could actually increase output and make up the difference, we're mainly talking here the Saudis, perhaps something from the UAE, Kuwait, even Russia. But they can't do that because they're not allowed to, in terms of their agreement, take market share or the allocations from the other producers who can't increase. And you might be looking there at more at Nigeria, Angola, some of the other ones. So I think they probably could, if they were determined enough, do it, but it would mean breaking the terms of their agreement. So I don't think they will. I don't see that extra number of barrels coming into the market. The question I also ask for, if you were trying to still construct a bullish narrative for crude oil, you'd have to believe that demand is going to surprise to the upside, or at least continue to grow. And you'd have to believe that supply is going to surprise to the downside. And I think that's still possible. I mean, Omicron could turn out to be a damp squib, and you could end up with supply issues, as we've seen OPEC Plus struggling to actually reach their targets. So, it's too early to say, well, we've had a peak for the year. However, I think, the chances are you're going to see more oil come into the market, even if it's not that 400,000 barrels, per month. And that should create some kind of downward pressure on prices. But there's still quite a lot of uncertainty out there.
Omar, on that, just picking up on your kind of sort of changing tone towards bearish, inevitably we saw the big oil price collapse of the last week prior to to the OPEC meeting on the back of this scary monster that is Omicron. It sounds like the latest Hollywood blockbuster, but nonetheless. There's a picture of something flying through the air. All right. But Omar, your thoughts on why you're seeing the tone shift bearish, and if Omicron proves to be a bit of a false alarm, that might see prices return back towards 80, because that's where they came from.
Look, again, I think you have to be kind of very careful with the Omicron stuff, right? So we're doing exactly the same as people did back in, when the virus first appeared, right? So when the virus first appeared, we got that massive sell-off. And then when people started dying, everything went to the upside. But people were still talking like, yeah, but now we're going to die and now it's going to get worse. And the market just went up and up and up. So I think you're doing the same, or we're in danger of doing the same thing. So forget about Omicron. Because unless somebody knows something which nobody does, then it's pointless thinking about it. So yes, we could all die, and no, it could be harmless, and I don't think it factors in because there's nothing intelligent to say about it. So the question is basically what happens.
But it is fair to say that the threat, or the perception of it being a threat to demand, sent the oil market into a sort of a radical tailspin.
Yeah, it's not just oil. So you have to kind of, this is what I was trying to explain to people here in the office, or at least put across my view. So when you see stuff like that, people kind of, if you look at a chart, you'd see basically a big, long red candle down. So people will say, that's Omicron. So what I'm saying is that red candle, however it's caused, whether it be Omicron or meteorite or dinosaurs, doesn't really matter. What really matters is that big red candle. Forget about the explanation, forget about, and then kind of trying to basically push that narrative forwards. It's just a big red candle to the downside, which has implications for the price, not necessarily because of Omicron, simply because sentiment was there to sell. People were more in fear than greed, et cetera, et cetera, et cetera. So I think basically market from here, WTI plus or minus, goes from where we are to about $61. And once we get to about $61, the market has to decide between a kind of immediately.
Sorry, Omar, does it go there alone, or does all financial asset take a similar?
No, I think it goes there alone. I think I'm still very constructive on equities. I'm still constructive on Bitcoin, but I think oil is separate. Usually, oil kind of tends to lead, but I think you need to you've had a lot of people. So if you look at historically what happened last year, you had a lot of people that were bearish. Price went up massively. When we got to about 80, people who were bearish all of a sudden turned bullish, and they were looking for 100 plus, right? And they all went in again. Then the market nosedived. So basically, those people still have a lot of liquidation to do. So I think that is what's going to, there is no longer, I think, a belief, a sentiment, or whatever you want to call it. There's been too much damage done. So it's like a boxer. He looked great in round 1, but now we're in round 10 and he's beaten, half to death. So I don't think he has it in him to kind of, win the fight. I think basically you get capitulation, and I think that capitulation moves the market from where we are now to about $61. Once we get there is basically the decision that the market will have to make, whether basically we head lower still, or whether we turn tail from that $61 and try and set new highs.
Just by the way, the time in London is wrong on your clock. I had to say that because it was just annoying me. Kate will very clearly tell you it's not 7:45.
That's why I'm bleary-eyed.
She is in London, and if it was 7:45, she'd be smiling a lot more. But
Sean,
Kate,
if I hadn't known you for the past 20 odd years, I wouldn't be doing this.
I do appreciate that. OSPs went out overnight, and they clearly were quite bullish given the nature of things that Saudi Arabia and OPEC, you would think, were being a little cheeky, but nonetheless, markets bounced up on that. Your thoughts on the Saudi OSP based on the decision they made on Friday and now adding an extra cost on their barrel?
Yeah, I mean, I don't know. I get the feeling that the market is sort of looking for something, and the OSPs. I mean, there's commercial reasons for setting the OSPs the way they are, refining margins, etc. So I think I don't think it's a huge factor. I think more. I mean, Clive was saying about how OPEC isn't producing, OPEC Plus isn't producing at their full allocations, which is true. But if you look at the way that they see it, you have a surplus of over 2 million in January, peaking at, I think it's 3.8 million in March next year. So, that kind of balances things out. And if you look at their statement, they keep telling the so-called overproducers, that's Iraq, at times Nigeria, that they should compensate for these cuts, and they don't. They sort of keep pushing it back, and I don't think it's a very serious thing. It's one of those things where this is what they say, but they're not actually going to do it. I think, Saudi seems to be something. Saudi OSP seem to be something that people have been following a lot more closely than they used to in the past. But I think there are other tensions. I mean, if you look at the situation in Ukraine, I mean, what happens there? What happens to gas supply to Europe? Are we going to be burning more oil? Are we going to be using more coal? So I think the structure of the energy complex is so is a bit unique at the moment. So people are looking at US jobs data. People are looking at inflationary pressures, which we're seeing not necessarily because of oil prices, but consumer. I was talking to a Saudi source the other day, and he said, if you look at it, even at 80. Compared to other commodities and prices, it's not that huge. And the price of a Thanksgiving dinner in the US was up 25% this year because of agricultural yields and corn, and the cost of a turkey was even higher. So I think that's where they see it. It's not so high compared to the inflationary pressures that we're seeing in other
Relatively
commodities.
speaking. Yeah. Clyde, your thoughts on the fact OPEC did this little sort of fidgety thing that they never closed the meeting. This OPEC meeting of last week was never adjourned. I don't know if they're all still sitting in some virtual parallel Zoom room for 24/7. But your thoughts on that as a decision, and is it relevant?
It's probably not relevant, but it was a really good little bit of what I would call spin. Just keep a little bit of uncertainty out there, keep it in the back of this market's mind that yes, we can change our mind very quickly if we want to. Doesn't mean they actually will, no, but it's an interesting little decision. I think it just adds a little bit more to the uncertainty rather than clarifying anything. I think it was quite an interesting thing to do. But one thing I'd like to comment a bit on the OSPs. I actually think it was quite a brave decision. Yes, I understand how the Saudis basically set them. They look at the market structure and, the time spreads and things like that. And on that basis, it was probably justified. But we have seen in the past that when the Saudis want to do something with their volumes or prices, they're quite happy to, make counterintuitive, if you want to call them, decisions with OSPs. So raising the price for Asia is an interesting thing to do, because Asian demand has been weak basically the whole year. It's certainly lagged Europe and it's certainly lagged the US. Now, I'm not going to sit and criticize people in the investment banks, but I will note that when they write about the oil market, their narrative is really a US-Europe-centric narrative, and very few of them ever actually talk about Asia. But Asia is the biggest importing region, and it takes about, 2/3 of Saudi oil. So I think it's much more important that, we have a look at what's going on in Asia. And, we have seen an increase, an uptick in imports in November, and we will probably see another uptick in December, maybe. But that's really on the back of the Chinese allowing their independent refiners to stock up with crude before the end of the year. They gave them fresh quotas. Does this actually mean that there's a strong demand return in Asia, and that we're starting to see Asia recover in line with what was happening in Europe and the US? I'm not convinced of that yet. I really am not. And that's what I think it's a really brave decision by the Saudis to increase the price of oil for, early next year, because, you've got refining margins falling in Asia. You've got the Brent Dubai exchange for swaps falling as well, which in theory will make oils priced against Brent cheaper than the Middle Eastern grades. So you might actually start to see more clearance of cargoes from West Africa. You probably are going to see more demand of US cargoes flowing into Asia as well. And I'm not, far be it from me to argue with Saudi Aramco, but this does seem a decision that, if anything, will encourage their refiners in this part of the world in Asia to switch to their competitors.
Omar, you sort of indicated in your previous comment that the disconnect that oil could go lower, but not with the rest of the market. Well, whether they're together or in a parallel universe, we have much stronger language about inflation in the US, and I know you have in the past criticized the potential for tapering and for monetary easing. We do have this week coming the US November Consumer Price Index, which is expected to show even higher inflation. Your thoughts on where that goes vis-a-vis its impact on equities, and then what that does to overall confidence?
Yeah, so first, I don't think CPI in the US, I don't think they have energy in there, so that's aside.
No, but that's aside. I'm just saying from what it means for the equity markets.
Yeah, so I think basically, inflation over time is negative for for equity prices, for assets. But at the beginning, it's excellent. And the reason why it's excellent is because you look at your portfolio and you see that the price of whatever it is that you have is skyrocketing because basically, inflation is there. It's only a small amount of time. As inflation gets inbuilt, then asset price or equity prices will tend to fall because think about it in terms of an iPhone. An iPhone will go from $1,000 to $1,500 to $2,000, but Apple is always selling at a negative kind of thing, so they're not making money. People will make more money. They don't want to take risk because they can only get a certain return from equities if they put it in a bank, and the bank is paying 5, 6, 7, 8, 9, whatever percent. But at the beginning, when everything is inflating, when there is this fear of inflation, then everything looks rosy. It's only later on in the cycle. How, is it a week? Is it a month? Is it 10 years? Who knows? So I don't think necessarily that the fact that, you have inflation and inflation is going to grow, that means that equities are going to tank. And why? Because look at the market right now. So I don't expect it to tank. It's not tanking.
Well, tanking is a big word, but let's at least say it plateauing. The threat of a tightening cycle does seem to have at least come at the same time as the market is choosing to plateau.
Well, yeah, but I think basically the market, equity markets are correcting. Okay. So correcting is so you've got three trends. You've got up, down, you've got sideways. That's actually a trend as well. So when they correct, they don't necessarily need to go down. Sideways can be correction as well. But what markets do not do is go sideways for an extended period of time. So sideways is like an energy build. They start to build energy for either the break up or the breakdown. So it's very rare. I saw it, I think, in oil where it moved sideways for about a year, something like that. And sideways, that we had that massive break and massive dump to the minus 40. So markets don't like going sideways. It's a kind of energy buildup. So no, I think basically equities, all the rest of it will go up. And you still have to show that this, inflation is quote unquote really there. So what's interesting is that the inflation that we're seeing is not in so much in daily stuff, but it's in the very rare stuff. So the price of bread would go up, let's say, by 10 cents or 2%, 3%, whatever it is. But the price of something that's unique, like a Rembrandt or a Picasso, Mona Lisa, will go up 100%. Okay, so I don't think that you're seeing inflation, especially wage inflation, all that kind of stuff across the board. So
getting to a
we're
level
seeing
that's
the
going
fear.
to.
Yes, we're seeing the fear, but we're
Well,
not
it certainly will be
actually
interesting to see where the Fed goes at their next meeting on this point, because I do think the rubber's meeting the road on this, where the politicians are getting kind of nervous. Let's go to the survey question and give the rest of the room a chance to have a view on this question of Brent. Brent crude oil will return closer to $80 if news on Omicron turns out to be a false alarm. We're starting to see the first Fauci overnight saying, infamous Fauci, what's the guy ever going to do if this thing ends? He will have to go back to obscurity. But nonetheless, Fauci, the US leader for the COVID management, said overnight that things don't look too bad, et cetera, et cetera. So the language about the big bad wolf of Omicron is starting to appear that maybe it isn't what we thought it was a week ago when it dumped oil markets by $10. So will the inverse happen, that once it's the scientists come out that this isn't the boogeyman, that we will return to $80? Agree or disagree with that statement? Kate, your thoughts for this week? I mean, we do come out, I think, in some ways still digesting this decision by OPEC, still wondering where is demand erosion. We have some of the politics here, geopolitics. I welcome your thoughts that there was a heavy lobby effort last week led by Amos Hochstein into Riyadh to try and get Saudi to play ball. Your thoughts on whether that had an impact and where the geopolitics play on this issue?
I don't think so. I don't think it had an impact because, they don't really need to do anything at the moment, given the way the market's going and the fact that they're not really producing it at their allocation. But again, we've been talking for months about Iran possibly coming back. Iran isn't coming back, given what the status of negotiations are. And I think you've got the transcript of the briefing by the Americans. So I think with Iran not coming back, yes, you've got slight increases from Venezuela, but shale isn't really going to come on as strongly. U.S. shale isn't going to come in as strongly as it has done before because there's more discipline, and you're seeing a few divestments here and there. So I think the focus on oil is receding. It isn't that big a deal anymore. I mean, you should be looking at investment in other energy sources, in gas and renewables. And if you look at what's happened in the UAE and where you are at the moment, the way they're restructuring ADNOC and all the other state-run energy companies, it's more geared towards creating this sort of more of an integrated energy company than an oil company. So I think the move is sort of slowly moving away. But I don't think, your survey, I don't think prices are going to move up that sharply. And you come to London, you will not find a seat in a restaurant from now until Christmas. I mean, it's packed. You go out and every restaurant is full. People are spending on food, because they're not traveling. So I think it's
the party season.
It certainly is. Yeah, no, we're acting as if nothing's happened. You just have to wear masks now, mandatory in shops and on public transport. That's about it. But I think that's where the money's going. People are not going on holidays and spending it at home. So I don't know how that's going to. But that's unique. We don't have
it is.
lockdown.
It does seem that there's many realities in Europe at the moment. Let's get the survey result and give Clyde the last word this morning. Agree. There's an optimistic, bullish sentiment in this room that prices will bounce back. Clyde, I think one of the big questions we've had on this program for a while has been, what is the health of China at this moment? It seems a lot of the data points are pointing towards an uncertain outlook for China. Welcome your thoughts on that vis-a-vis obviously where it intersects with energy demand, oil demand.
Well, I think China's a kind of mixed case at the moment. I think they've got very strong demand for certain types of energy, namely natural gas and coal, but not so much for oil. You've got to remember that China's still got quite a lot of regional lockdowns in place. They are still following a COVID zero strategy. They're still effectively locked off to the rest of the world. And I think that is, keeping a lid on their oil demand growth. And we've seen that. I mean, they're actually going to be down this year on imports rather than up. And I actually don't remember when last that happened. You'd have to probably go back 20 odd years before that you get something like that. So it's quite an interesting dynamic that's going on in China. I think, if I look at Asia, I'm not really seeing too much of a demand growth story. If you believe that $80 was a good price for oil prior to our little, dump last week, I'm not sure I do. I'm not sure I think that $80 was the right level to be at in the first place. I look at, the investment bank thesis where, the price drop means the market's factoring in the loss of 7 million barrels. Well, no, that actually is only true if you believe that $80, $85 was the correct price in the first place. If you believe that $70, $75 is the correct price in the first place, then, we've just, popped a little bubble and gone back to where we are. It certainly seems to me that the major importing nations do not want prices above 80. And OPEC's probably got a line in the sand of about 70. So I think that you're going to see a tug of war to get, the price somewhere between those two levels.
Yeah, we had started this week with the Indian senior energy advisor in India sort of banging the table that's above 70 won't be tolerated, and being all confident that he had his team now with the US and China and everybody on board with sort of holding that line. But just quickly, Clyde, on that point of China's demand outlook from the point of view of Asia as a whole, OPEC Plus has looked to the major consumers in Asia as you said, for the first time in 20 years, maybe you're seeing a decline in imports into China, whereas OPEC Plus over that 20 years and certainly the last 10 has looked to China for that incremental demand growth. Should OPEC Plus be paying attention here that this is a trend change, or is this a one-off moment?
I think you're going to see a slowing down in Chinese growth. I think they're reaching the point where they're going to stop building new refineries. And the other point is, crude import demand in China is just one side of their equation. A lot of what they're now doing is importing oil and exporting products. And that's going to be a trend that continues. If you actually look, their product exports are up quite high. They're still growing. So I think you're going to see that sort of dynamic that if they are putting more product into the market, that should, in theory, a barrel of product exported from China is a barrel of product not needed from some other refinery somewhere in the world because it's now being bought from a Chinese refinery. So it's not a zero-sum game. But I think in trend terms, I would still expect China's crude imports to increase because they are building out more refineries. It all depends how they want to run their energy system. If they want to utilize their refining capacity and export more product, or if they want to start shutting down some of the older, less efficient refineries. And that's sort of a policy decision. But at the moment, I think they're on track to still increase imports. What I do see coming to an end is the need to import for their SPR. And that's been in the past few years about 1 million barrels per day has been flowing into the SPRs. So I mean they don't disclose that. That's really a calculation based on the total amount of crude they have available from imports and domestic output versus what they're processing, and you just subtract the two and you work out that over the last few years they've been sending up to 1 million barrels. Last year it was 1.2 million barrels a day went into the SPR. That sort of thing is coming to an end.
Right, and so is this podcast. So thank you very much, Kate Durian from Sleepy London. If I don't get a chance, Kate, again, to thank you and wish you a very Merry Christmas, and I will close my eyes on occasion and remember the glorious carols we used to sing before Christmas at your house in Dubai over so many years. So happy holidays. Go out and join those busy restaurants.
I am.
Clyde, lovely to have you join us. I probably won't see you again on this side of the holidays, but hopefully you'll come back and join us occasionally in the new year. We'd really appreciate that. May the force be with you, as the Star Wars sign behind says. And Omar, thank you so much as always. We'll see you next Monday, I'm sure. And by then, I'm sure the time in London will be something more conducive to its reality. Thanks, Omar. All the best, everybody. Catch up with you.
Bye.
Take care. Bye-bye.